Today I want to talk a little bit about using ETFs for the wheel strategy. If you need to add some diversification to your portfolio and you want to change up the way that you collect premiums, ETFs might be exactly what you're looking for. When you're running the wheel strategy on individual stocks, you're really vulnerable to any news or information that may impact the price of that stock, such as an earnings announcement or maybe a lawsuit or anything really that could bring the price of that stock down. If you've been following what we do at Premium Pirates long enough, you know that we really advocate for trying to not overinvest in one specific stock or even one specific sector, but we like to try to encourage you to build a portfolio of stocks that are good wheel candidates so that you allow for the possibility that you may be wrong occasionally. ETFs, just by their nature, make it really easy for you to add diversification to your portfolio in the way that you're running the wheel strategy. So what are the few things that we need to look for when you're trying to evaluate if an ETF is a good candidate for the wheel strategy or not? First of all, it needs to have a high trading volume. You're looking for minimum 1,000 contracts per day because the last thing you want to do is get tied up in a position that you can't get yourself out of. The next thing we want to look for is a mid-level of volatility. You don't want to go too far to the conservative end where the volatility is so low that the premiums just don't justify the effort. And then on the other side of the equation, you don't want to go too far to the aggressive, maybe using a really exotic leveraged instrument where the premiums look great, but the volatility is just all over the place and it's an absolute roller coaster. The next thing we want to look for is an ETF that has a clear investment strategy. If you cannot explain what this ETF is trying to do in one sentence, it is probably not a good candidate for the wheel strategy. And finally, you want to look at what is actually in the holdings of that ETF. A basket of sketchy small cap stocks, even though it's allegedly diversified, is not a good candidate for the wheel because you don't actually even want to own the shares of the stocks that comprise that ETF itself. So like everything we do in the wheel strategy, you need to do it on ETFs and stocks that you're actually willing to own. Now, even though finding these ETFs is not terribly difficult, you're still left with the challenge of trying to figure out how to efficiently deploy all of your capital and manage your risk. You've got to compare all these different expiration dates, all these different strike prices across many different instruments to figure out, how do I maximize my premium? How am I making the most money possible from the wheel strategy? So I'm going to show you a much easier way to do this with the Premium Pirates tools. Now, the first thing you want to do when you're trying to hunt down these ETFs for the wheel strategy is head over to premiumpirates.com and log into your account. I'm going to put links down in the description of this video. I've created CSVs that have a ton of ETFs and a ton of leveraged ETFs in them already. You can download them and they're going to plug right into our watch list. So if I go here to create a watch list, just populate it with ETFs and then hit import. I'm going to show you the two files. One will be wheel strategy ETFs and the other will be leveraged ETFs. The actual file you may download is probably going to be different than what I have here in this video because I'm trying to keep this up to date, but I didn't want you to have to go out and find the ETFs on your own. So hit load watch list and you're ready to go. If you've used Premium Pirates before, you know that when you combine our watch lists with the options screener is when the real magic happens. So let's head over to the options screener and let's load up some settings. So for the watch list, you want to limit to that ETFs you just created. I don't really worry about annualized return. You don't really have to worry about discounted fair value because I'm not trying to price the ETFs. I always like minimum return of 2%, like to get in with cash secured puts, strike price below 100, don't have to do much with average trading volume, don't have to worry about earnings or dividend or ex-div date or anything like that. When you're looking at individual stocks, you do have to add a lot more filters and a lot more criteria in here. But for now, let's look at a delta of a max delta of 0.3. Always try to filter out anything with wide bid ask or thinly traded. When I mentioned that you're looking for things with a good trading volume, you can usually police that with these two boxes checked instead of actually having to worry here about the average trading volume. So hit scan. Right off the bat, you've got some really attractive things you could consider opening. This GDX ETF, this is a really well established, easy to understand ETF. If you look at the chart, it's been trading in a range. There's people way more gifted at reading technical analysis than I am. I don't spend a lot of time obsessing about it, but I know that there's people that do. And if you're one of them, that's totally fine. We have the information here for you. But for the purposes of this video, hey, it's trading in a range. We're not in some, nosedive situation where we'd be really worried about this. So, this position, if I sell this CSP out of the money, it's currently March 21st, a $32 cash secured put. What's it trade? $34.89, just shy of $35. This is going to give me a 3% actual return, a 13% annualized return. Assuming you can get into and out of positions and your campaigns quickly throughout the year, if you get, 13% annualized return, be able to continue to collect premiums and compound it over the course of a year, that's just going to turn into some really nice performance over time. The delta here again is 0.26 on the high end, implied volatility 34, IV percentiles 15%. I mean, this one to me is a pretty clear option. This could be a good candidate to look at to run the wheel strategy on this ETF for the start of 2025, or at least the first half of 2025. Again, XLE, they're really old, well-established ETF. It's very easy to understand what the investment strategy is. This is an $82 strike price, so it's going to take a little more capital to get into. Obviously, to open one contract, you're going to need to secure $8,200 in cash. Even then, the premium, 2.2%, 13% annualized. IV percentiles a little bit on the higher end versus 15 here above, but it's another option as well. And if you could think about trying to do this research on your own without this tool, like, yeah, even if you narrowed it down to, hey, GDX, XLE, VNQ, SPY-G, these are all great options for the wheel strategy. Like, that wouldn't be that hard for you to find based on the criteria I gave you. But then you have to go and look at like literally every single strike price, every single delta across all of these expiration dates from December to March, from even further out into June here. It's an incredibly complicated research project that just would take hours and hours and hours and just really isn't that fruitful. It makes it far more difficult to run the wheel strategy. Another option here is the Vanguard Real Estate. This is again higher strike at 87. Take $8,700 in cash, secure it. And the annualized return is a little bit lower. So if I wanted to be a little bit more aggressive, depending on what the market conditions are doing, let's take our delta from like 0.3 max to 0.4 max. See what comes up. Get a lot of GDX, where I start getting some much more appealing GDX positions. Keep in mind this thing is trading just shy of $35 right now. So it's a $34 strike with an expiration that comes out in a couple weeks. And this bumps us up to a 59% annualized return, which is huge. But the IV is still 39%. It's in the range, the 20 to 50% range we might be looking for. IV percentiles low, on the low end. Like, this is another potential, same ETF, this is another potential strike you could open on depending on how aggressive you are and, again, what the overall market sentiment is doing. I've created other articles on that too, like how I choose my delta based on what the overall market is doing on the Fear and Greed Index. So again, another reason to follow this video. But there was another one I found here. So SPY-G was one that I was looking at when we had our delta at 0.3. And I thought this might be another thing that would be interesting to explore for opening some wheel campaigns on in 2025. The reason is because here it has an $85 strike price, so $8,500 cash secured position. Now, if you look at the holdings of this ETF itself, it is very similar in makeup to the actual SPY and gives you exposure to a lot of the same companies, but the strike price on SPY itself would have to be so much higher. I mean, it's trading at $595. To open an at-the-money strike would take you, almost $60,000 in capital right now. Whereas to get exposure to a similar investment portfolio here, we're looking at like an $85 strike, $8,500 cash. You would need to go ahead and secure that position. So it could be another interesting option as well. Get rid of this default. Go ahead and hit scan and bring that up. SPY-G would be one to look at. Again, annualized return of 9%. If you're looking to get regular income and you want to be well diversified, want to have exposure to really well-known blue chip companies, these are options for you. Using ETFs as your wheel strategy may not necessarily be an aggressive growth strategy way to run the wheel strategy, but it might be a more predictable and diversified way for income generation on your portfolio. Finding ETFs for the wheel strategy with the right balance of premium and risk is so much easier when you have the right tools. If you haven't already, I'm going to encourage you to head over to premiumpirates.com and sign up for a free trial for 14 days. It's fully functional. You can use all the tools as much as you like. You can use the wheel strategy screener, load up these ETFs watch list that I was telling you about, and really see it's going to make everything you do with the wheel strategy so much easier and more effective. If you want to stay in touch with us, I encourage you, follow this channel on YouTube, like this video. I'll put links down below. You can sign up for our email list or join our Discord, engage with us as much as you want. Thank you so much for watching, and until next time, keep plundering those premiums.